Well, the crypto industry may be closer than ever in getting the regulatory rulebook that it's been demanding for years. The Senate Banking Committee aiming to bring the Clarity Act to a full Senate vote this month ahead of the July summer recess, as lawmakers work to eliminate any bad actor provisions within the bill. Coinbase's Brian Armstrong says that he is sad to hear how JPMorgan Chase Chairman and CEO Jamie Dimon feels about the Clarity Act and what he told Maria about it. Watch this.
Are you happy with the way the Clarity Act is turning out?
No. No, because it allows them to effectively pay interest on deposits, stable coins or something like that, without the protection that they should have. And it doesn't do anything for AML BSA. It has almost no legal protections. So no, the banks will not accept it that way.
They won't accept
the ABA, the small banks, the credit unions, it's not just the big guys. I'm not worried about stablecoin, but if it happened, I'm telling you, I would have nothing to do with it, and it would eventually blow up on its own. Okay, but that's my personal thing. But I do understand the concern of all the other banks. So,
well, the markup is coming. I mean, what are you going to do about it?
It is. We'll fight it. If we lose, and we'll live.
Yeah. Okay.
But it will be fought. This will not be. No one's going to bow down to this guy, okay, or that company. And but he's the only one.
Yeah.
And he's spending hundreds of millions of dollars in Washington this thing.
Okay? He said he's representing the whole industry.
Full of
And joining me now, Abra CEO Bill Barhydt. Abra is a wealth management platform that offers investors a suite of digital asset services. Bill, welcome to the program. Do you see the Clarity Act passing through the Senate?
I do. I think the Senate realizes that this is a net positive for the American people, for assets, digital assets innovation. Innovation in the digital asset space has been super strong. The biggest hamstring to the entire space has been lack of clarity, pardon the pun, on U.S. regulation. This fixes that problem for sure.
Yeah, the Clarity Act is certainly, we've got a big eye on it right now, and the president is waiting for it as well. And Senator Tim Scott has been working on this for over a year. You know, Maria had Lisa McClain on the program about the Clarity Act. Listen to what she asked her.
Sure.
I understand from the perspective of the banks where they're coming from. I also understand the other side with the Clarity Act and the currency in terms of what we're doing. What I do know is that's democracy at its best, right? There's going to be a markup on it. We're going to debate. Disagreement isn't disloyalty. We're going to debate the issues, and much like in business, we're going to get 80%, I think, of what everybody wants. Everybody would want a better deal, no question. And I understand the banks want the status quo. Unfortunately, we can't have the status quo, and there's going to be some changes.
When would you expect final passage?
You know, I wish I had a crystal ball. I would say within the near future, the next maybe month or so.
Bill, your reaction to what the congressman told Maria?
Yeah, sure. I think she's right. I think, look, the sausage factory process is ugly. It's hard. Many of my colleagues have been in the middle of this. I think Jamie Dimon is wrong. I think he, first of all, I have friends at Chase that are working on digital asset strategy and implementation. So just to, his verbal diatribe aside, the reality is this is good for the banks. It's good for the software industry. It's good for AI, which is likely going to be the big users of digital assets in the long term, not even people. So all in all, we need this urgently. And I do agree with the Congresswoman that we're talking about probably, a month for the House to reconcile.
Okay, well, we're going to be watching it. Also, there's this. The Commodity Futures Trading Commission recently approved the first regulated perpetual futures contracts. So this follows the rapid rise of offshore exchange hyperliquid. They're round-the-clock, high-leverage markets did show strong demand for trading across crypto, commodities, even stock-linked assets. Bill, I want to get your thoughts in particular on the crypto side, but, we've heard Donald Trump Jr., he's talked about this many times, and his brother Eric said, look, the world operates 24/7, and the way that these markets are structured and the hours that they're trading, whether it's crypto or whether it's the futures markets, et cetera, needs to change. This is a new age, a new decade. What do you say?
Well, look, I mean, traditional markets are closed over 125 hours a week. and crypto digital asset markets are open 24/7. As I mentioned earlier, much of the innovation moved outside of the U.S. because of our, draconian, arcane, laws around digital assets and both commodities and securities, which go back in some cases 100 years. And so fixing that problem initially via guidance, I thought the CFTC's guidance was very good. I thought that the idea that perps done correctly or perpetual futures done correctly, which is what Hyperliquid enables inside a fiduciary structure, can actually be a fantastic tool for the U.S. investor. And again, it's all about innovation. And what this tiny team at Hyperliquid built, we hope to be able to make our clients at Abra, we may hope to make this tool available to them because they want it. They want the ability to trade 24/7. Mm-hmm. They want access to next generation products like Hyperliquid, like tokenization of real world assets. And we think that the guidance coming out of the CFTC in this area is spot on.
Let's take a look at crypto right now, actually, because, and this is obviously the risk on or the risk off trade, as with commodities, when you watch these crypto prices. And as you can see, after this rally in the stock market futures, we are seeing a boost, albeit not a big one, to Bitcoin, Ethereum, and XRP. You've got Bitcoin at 63,000. But, it's interesting because at the same time, we had calls for Bitcoin to be 120,000, 150,000, even higher. But there's the shine has kind of come off of these currencies, owning these currencies outright. It seems that investors are moving away from that idea. How do you respond to that?
I've had this discussion every 4 years, like clockwork, for 15 years. Bitcoin is dead. The digital asset space is dead. Crypto is dead.
I didn't say dead. I didn't say dead, Bill.
No, you didn't. You didn't. But some of your peers have, for sure. And look, the bottom line is what's interesting. Two things, right? One, the Bitcoin volatility is actually compressing. Right. And so what we're seeing is, we used to see these 80% drawdowns during these 40-year cycles from peak to trough. And that is actually compressing now. We went from 125K, to about 60-ish K. And I do think we've bottomed. And if you look at the 200-week moving average for Bitcoin, if you can show it, that's historically a bottom in this cycle. And we've been bouncing off of it and around it. And I think the next 90 days, we'll see a bottom form. The second part is the tokenization of everything.
Thank you,
right?
Bill.
And that is basically leading. Yeah, sure.
It's a lot to watch, but we're going to keep on it. Bill Barhydt, thank you so much for being with me. We'll be right back, everybody.
All right.